Right, so we want to cover this essential change for Hyperliquid and why it's massive and why a lot of people don't really click yet exactly why. Essentially, so those who don't know, Hyperliquid's launched an option for buyers to buy pre-IPO for SpaceX initially, but there's speculation that Anthropic and OpenAI and others will follow. I believe it's quite likely. So essentially, it's quite low volume at the moment. You see open interest at 35 million. I mean, when it's valued at 1.7 trillion, it's quite low. But this is an interesting idea because now you have an alignment of you have VCs, funds, banks, Musk, others. They're incentivized to keep this price very high. They're incentivized to prop up this price until officially they actually launch on exchange and actually launch on the stock market, and then they'll crash. Then they'll dump. Very similar to exchanges do, projects do on the smaller exchanges. I used to be essentially a partner in a VC. We managed 80 million assets under management, Talk Ventures. And the idea is that a lot of funds essentially we launch on a smaller exchange, support the price, and then we launch on a bigger exchange when we have liquidity, and then we crash the price. That's a textbook sale. That's just part of the market. I'm not saying that I did it, but I've witnessed it a lot with a lot of VC funds. And essentially, this is one step closer to pre-IPO lending. This is why it's massive and why nobody has clicked yet. Is this is ginormous, right? This is enormous for Hyperliquid, enormous for the token, enormous for the sector. You're sitting on tens of billions of dollars worth of profits. Getting out of your pre-IPO shares is difficult. If you have vested shares, it's difficult. These are no, this is all paper. This is a bullshit market. If you have IPO shares and you're sitting on massive profits, you can't sell yet. You likely breach your SAFT agreement. So this is a artificial market. Buying isn't a good idea. Buying pre-IPO is not a good idea. You're going to get rinsed. But this is a very interesting spot for the space because this reiterates also my clarity concept for stablecoin rails. This is a step closer to that. This is the tokenization of stocks and also allowing the concept of early liquidity. So if your vesting schedule is long on SpaceX, maybe get a few percent of your tokens initially, you have to short your stack to protect the price. So if you're in massive profits, you have to open a ginormous short because then, or you have to sell OTC, and selling OTC is not that easy. And also, there's a lot of paperwork, and there's a lot of scams. Like you can really be screwed over. But via this, specifically, trusted participants like banks, funds, government who might have considerable shares, they'll likely be able to get access to exit their vesting via stablecoin rails. That's massive. We have trillions and trillions of dollars worth of profits in OpenAI, SpaceX, Anthropic, and no doubt there'll be others. So this is massive for the crypto space. Essentially, this is how our mega bubbles are formed. You get early access to your money, and you get early access to your money on stablecoin rails. So as I believe, essentially, this is the final cycle stablecoins in crypto AI. So essentially, the stablecoin QE, crypto AI, tokenization of everything, essentially tokenization of stocks, allowing early exit liquidity, and that liquidity will move into crypto. So you heard it here first, and yeah, stay frosty. Don't get shaken out of the market. Essentially, August to November, you want to be well positioned. Get an SRB wealth if you have the means. Join me, and I'll help you multiply your wealth. Till next time.